I got it live. Yeah. All right, bye. Sorry about that, guys. We stream on YouTube as well. Every morning, we're going to come through. We're going to stream on YouTube as well as Discord. And I missed the live button this morning. So that was Big Brother making my phone ring, making sure you guys are taken care of. I apologize for that. Um, so we're going to be able to use, we've got shapes. Show me the areas where you're getting in. You can use the arrows, point out great looking spots for trades. But the most important tool that you can use as a brand new user is this call out. All right, how's that, Bobby T? Loud and clear, 5x5 as Gary says. All right, awesome. Arrows, shapes, and then the call outs, guys. This call out button is where you and I are going to have a conversation. This call out button is where you're going to talk about what you see, why you're getting into a trade, why you're getting out of a trade, maybe how you feel about the trade. And when you use the call out, you're going to do one of two things to get this into the room. And I'm going to slide the room over to this screen just a little bit. I can click this copy button, and it's going to put that capture software right onto my clipboard. I can come in, if you're using the pop out, Control V is going to put that picture in there, click enter, and now you've posted a picture. We can have a great conversation. The other way to do it, and this is what I like to do, is click that upload button, and from that upload button it's going to give you that picture, but it's going to attach it to the cloud, that screencast.com. And if I click copy, once again I can come to the room, Control V, put it right in the room. Guys, this is our conversation piece. This is how you and I talk about everything that you're seeing, everything that you're doing, and make sure that I can give you the absolute best feedback that you need, because that's really my job. 15 hours a week, I'm here live to give you everything that you need. So I'm going to close that out, and then it reboots and it's ready for the next capture. If you are brand new, if you're coming through, if you're just learning the software, just getting to the classroom, do me a favor, take a picture of your take a picture of your screen, take a picture of whatever you have going on, post it in the room, and just write test. Let me know that you can take that picture, that you can get it in the room, that we can have that conversation. And then what we'll do is we'll go from test pictures to starting to get pictures of charts. You writing on charts, well, this is what I see. Hey, Mark, am I seeing it right? And if you get in the habit of starting that conversation on day one, it's real easy when you get into that simulator and you start taking trades and following rules. So all this is on the software user guide. Raise your hand if you need the help. I'm here for you. And then we have the tutorial section where it says click here to start learning. I'm going to open that up. This is where the rules come to fruition. This is where everything comes together as you begin to learn the software. And I'm going to encourage you, for the first 30 days, keep it simple. For the first 30 days, we're going to focus on high probability trend trades, making sure that every indicator on every chart lines up to get you into the market. This is going to be the tool that gets you to a point to where you can read your charts. And that's really what we do. 90% of what we do is chart reading. 90% is looking at the indicators, taking the information that it gives us, and then really incorporating three essential elements. Being able to recognize where the market is likely to continue and using those continuation points for entries for a high probability trend trade. Recognizing where the market is likely to go. This helps us make great choices on targets. And then finally, where the market is likely to stop. And when we identify where the market is likely to stop, it becomes a great spot for profit targets as well, but it also keeps us from trading into areas that may reverse the market, and it sets a great foundation for setting up that high probability trend trade, focusing on the 5-1 trend trades that happen after the market has reached and turned from an area likely to stop is your best chance of success in the very beginning. This high probability trade High probability trend trade is a trade that typically, when you back test it, when you go through, when you study it, is a trade that's been shown to have the potential to win 70 to 80% of the time. So what that means for you as a brand new user is that 7 out of 10 trades are going to create a feeling of confidence. It's going to give you that dopamine response. You're going to feel great about what you're doing, and you're going to be excited to move forward. And that's really the idea for your first 30 days, for your first couple weeks, is just get you in that groove of finding the best of the best entries so that you can begin to learn to manage them. And simplicity is going to be the key to what we do in the very beginning. There's a million chart configurations that you can put together, but in the beginning, we're going to focus on a 13-2 chart and a 5-1 chart. And on those two charts, there's only 3 rules that we're going to be looking for initially. These are very basic. This is the foundational approach to what we're doing. And on the 13-2, the first 2 rules out of 3 have to be met to even look at a 5-1 chart. And on the 13-2, you will use that most current bar. And you're going to be able to determine quite a few things. You're going to be able to determine the trend of the market. If the background is green, that market's going up, and you're only looking for rules to be met for high probability trend trades long. If the background is red, we're in a downtrend, and we're only looking for rules to be met for high probability trend trades short. In the very beginning, the trend is very much your friend, and you're going to focus on giving yourself the advantage of trading with that trend. Rule number 1 and 2 are both met on a 13-2 chart. We're going to give ourselves a few very key advantages. We're going to make sure that we have strong triggers on our 13-2, and as we progress through the day, we're going to see this visually. We're going to talk about it. And then we're also going to make sure that we're not trading into one of those areas where the market is likely to stop. No termination conditions to be present. So rules 1 and 2 on the 13-2, we're going to take this broad stroke of a brush, give us the overall look of what the market is doing. And when those rules are met, and only when those rules are met, we're going to turn our eyes to the smaller, faster chart, the 5-1. And this is where we're going to refine that broad stroke of a brush. We're going to identify through rule number 3 the area where the market is likely to continue, and we're going to be able to pinpoint this with such accuracy on the 5-1 that we're going to use a limit order to buy or sell a pullback. We're literally going to wait for the market to come back, and we're going to pick the best of the best area. It's going to allow us to reduce our risk and to maximize our profit potential. So only 2 charts. I'm going to put this one in the room. Guys, I'm going to share a lot of pictures with you today. Take these pictures, store them in a folder, put them in a spreadsheet, but come back and study them. Really build these habits. And these 2 charts, 3 rules, that's all we're looking for in the very beginning. 3 rules for a high probability, everything in your favor trend trade. And while these are the rules for the trend trade, I've simplified this down just a little bit because we're embracing simplicity. Rule number 1 says that you must have strong trigger lines. Rule number 2 says no termination conditions. And again, I'm going to show you visually what each of these rules looks like on a chart so that you can begin to put them together. And then rule number 3 says that we're going to use that limit order. We're going to let the market come to us to buy or sell a pullback at an area inside of favorable large triggers. 3 rules provide 3 very distinct advantages, and that's kind of why we're rules-based trading, because we want to put ourselves in the best position for success. Rule number 1, those strong triggers give me the advantage of momentum. No termination conditions gives me the advantage of a clear path, and using that limit order to buy or sell the pullback at an area inside of favorable large triggers gives me the advantage of an entry where the market is likely to continue. So while I follow the rules, I'm providing myself the advantages. If I choose to break the rules or deviate from outside of the rules, these are the advantages that I'm giving up as I try to get into the market. And that's how I like to think about it. I love having advantages, but I really don't care for giving them away because the whole idea behind what we do is to make money, right? So every trade should give a distinct advantage. The first one is strong trigger lines. And strong trigger lines are pretty easy to identify. When the background on your 13.2 is green, when that trend is up, small triggers are going to break and accelerate away from the large triggers. Those large triggers will be wide, they're angled in the direction of the trend. It's that separation between the two that lets me know that the odds are favorable for the market to continue up. In a downtrend, smalls break below the large are wide, they're angled in the direction of the trend. Once again, it's that space between the two, between the large and the small, that lets me know that the odds are favorable for the market to continue in the direction of the trend. So here's that advantage of momentum. And we give away the advantage when those smalls work inside of the large. This is what we call a weakening of the large trigger lines. When we have a weakening of the large trigger lines, anything can happen up or down. So do me a favor as we go through. I've got about 40 of you in here, and I have a list of brand new people that are learning the software. I know there's a lot of you on demo in here. Just give me a why in the room real quick. Just a simple little why. If you're on board with me with that advantage of odds favorable momentum. Gary, I love the welcome message. Thank you for that. Guys, this is a community. We're all on the same team here. So a lot of experience and a lot of people looking to help out. Rule number 2 says no termination conditions present. Guys, I'm going through these rules, not fast, but maybe a little quick. As I go into rule number 2, I want to remind you, from the user page here at YouTube, the Nexgen Software Services, if you click on the live button, there are about 50 videos where these 3 rules put together very slowly, very in depth, are there for you. I've found that people prefer the live market, so while we have the video here, we're going to try and spend more time on the live market and your charts. But we're going to talk about rule number 2, no termination conditions. Simple 2 words right together, letting us know that we have the advantage of a clear path, because a termination condition is a Fibonacci-based indicator that may reverse the market based on a comparison of the area and the trigger lines. These areas can be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, cyan divergence low line, magenta divergence high line, large chart midband if the large triggers are a full bar away. Guys, looks like the market's giving it. I see a lot of charts coming in. We're going to get to each and every one of them. And then we also have any third divergence in the same area. Write a little note on a piece of paper. Those 3 divergences, you're going to recognize those on your smaller, faster chart first, and they're going to help you identify change happening on the 13.2 before you ever see it on that 13.2. But first you have to understand, how do we determine a termination condition? It's a 2-part recipe, guys. The first thing that happens is price reaches an area, meaning that those price bars literally come into contact, maybe a tick away, with Fibonacci support or Fibonacci resistance, 1-to-1s, divergence high and low lines. And when price reaches this area of support down here in the bottom right, the question to ask is, where are the trigger lines? Well, your trigger lines have remained above the area of support. Because they have, support may reverse the market. And if you take a short trade, rule number 2 hasn't been met. You have given away the advantage of a clear path. You see the same thing up top. As price comes down to this area of support, none of the trigger lines have broken through. This area of support may reverse the market. So in order to continue trading short, we're going to allow the area to break. We're going to give ourselves the advantage of a clear path. And an area is considered broken when both the small and the large get to the other side of the area. Whether it's going up into resistance, down into support, when both my small and large break through the area, you can see that support begins to act as resistance. And with this odds favorable momentum, I put that little play button there. It's time to begin looking for those odds favorable momentum and that no termination conditions to find a trend trade to get us to the next spot. So termination condition, no triggers break through. Areas broken, all of the trigger lines break through. And then we have what's called a 50-50. And as you work your way outside of that medium probability trade, this is going to be, or the high probability trade, this is going to be your first one, where an area has the potential to break with odds favorable momentum, but it hasn't broken yet. And this 50-50 means that your small triggers have come through the area, but your large triggers haven't made it yet. When you have an area with the potential to break with odds favorable momentum, we're going to talk about that picture perfect entry on the 5-1, and that's going to be your advantage looking for a potential short trade with that condition. And we're going to spend the entire day looking at these guys. Odds favorable momentum, no termination conditions, making sure that you are reading your indicators to give you the best information, to give you the advantages as you get in. Guys, quick note here. John sent out an email yesterday about changing the fib update period from 8 hours to 2 hours. When the market gets volatile, moves out of range a lot, John Novak has given you the instructions. You can change your update period, and it'll provide more of those areas of support and resistance to give you ideas where the market has the potential to turn. More areas to use as a termination condition. Gary, if you need help, you can always get with tech, for sure. I say go in and break it. I'm a big fan. Once you right click and you get your indicators, it's a simple little change. There you go. Or just run the installer, guys. And I'm going to help John with this one a little bit. If you're not comfortable doing that, go to the resources page and just run the installer. And what it's going to do is it's going to update every one of your templates. It's going to make sure that you're taken care of. It's a really easy process. Takes just a minute with Ninja closed. You'll download, run the installer. When you open NinjaTrader back up, you will be absolutely set. No worries at all. So let's do one more version of a termination condition to give you an idea. Price reaches these 1-to-1s. All you have to do is ask yourself, where are my T3 trigger lines? They all remain above the area. The area has the potential to reverse the market. And you can see that it does here. The market has been reversed when those small trigger lines get above the large go from red to green or from green to red. And you can see that this reversal from a termination condition provides odds favorable momentum, and this circle represents a potential entry on that highest probability trend trade. Sometimes your market isn't going to make it to that key area, whether it's from a low or whether it's from a high. And our next termination condition is going to allow you to identify this change as it's happening on this larger chart. And that next one is just using divergence. A loss of momentum in the market on your smaller, faster chart is going to help you identify change on the larger chart. And 3 divergence in the same location may terminate the trend. Divergence is a loss of momentum. When we see 3 losses of momentum on a smaller, faster chart, when your small triggers work their way inside of the large, going from odds favorable to anything can happen, this may reverse the market. This is allowing you to see change a little bit faster. You'll see it from a top as well. 3 divergences in the same general location. Small triggers work their way inside. This is your key to either exit a trade that you've already entered or not look for a trade until the conditions become favorable once again. You'll see this bottom or this top when you see situations like this. Even with odds favorable momentum, those 3 divergences may reverse the market. So far we have seen strong triggers providing the advantage of momentum, no termination conditions providing the advantage of a clear path. And guys, everything comes together. This is where the magic happens. Now we're just going to pinpoint that area where the market is likely to continue. And you're going to do that on the smaller, faster chart, on the 5-1 chart. And when the rules are met on the 13-2, when you have odds favorable momentum, there's nothing in the way, your 5-1 chart's going to look an awful lot like this. Large triggers up, price bars up, areas are blue and green in this uptrend, and we've made the decision that it's time to look for an entry. So now we're going to pinpoint. You're going to look near your large triggers. What areas are available to trade from? The areas can be fibs, they can be mid bands, they can be 1-to-1s. In this picture, we actually have all three. Large triggers are coming up. All we've done so far is identify our strong triggers, identify the areas that may fall within them. But your rules tell you that we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So, going to sit on your hands and wait patiently for a reversal bar on your 5-1 chart, meaning after all of these green bars, you do have a bar facing the other direction. That red bar comes into play. If the trend were down, we'd be looking for that green bar coming against the overall trend. When this reversal bar happens, you're going to create your window of opportunity. You're going to identify your highest point of support, which is this mid-band, to your lowest point of support, which are these 1-to-1s, inside of favorable large triggers. The large triggers are strong. They're working their way up. This window of opportunity is the area where the market is likely to continue. The fewer areas, the tighter the triggers, the smaller the window. Here, I'm going to right-click on my chart, and I'm going to activate a limit order to tick or two above the top of that window, 79.21, and I'm simply going to wait, and the market's either going to come to me or it's going to go without me. I have zero control over that. But if it does retrace, means a small pullback, against the overall trend, and comes to that 79.21 area, I'm in a long trade. I'm in a long trade with the advantage of momentum. I'm in a long trade with the advantage of a clear path. And now I'm in this long trade with the advantage of entering the market where it's likely to continue. This is your highest probability trend trade. Your first couple weeks are going to be just focused on getting that best of the best entry. Protective stops are always in place. We're going to put it below the window of opportunity, below those large triggers where the market shouldn't go. And guys, I'm taking this one 1,000 out of 1,000 times because 70 to 80% of the time, this is my most likely outcome, profit target reach. And then once that market pivots up, I can reduce my risk. And because I waited for the pullback, I've increased my profit potential, the distance between my entry and my exit. So guys, that is your high probability trend trade. This is your first 30 days. Momentum, no termination conditions, area for entry inside of favorable large triggers. So when it all comes together, I'm going to show you this picture. This becomes your study tool, and we're going to do this today as well. On your 13-2, if you have odds favorable momentum on that most current bar, if you have no termination conditions, you get your reversal bar, you can identify your area of support inside of favorable large triggers. This is what your high probability trend trade is going to look like after the fact. You can go back and you can study by just recognizing the tails on the 13-2, circling them when there's odds favorable, no termination, and seeing if they line up on your 5-1 at an area of support inside of favorable large triggers. A lot of you caught this one this morning, and I took a picture of it just to show. The exact same concept. This was crude oil this morning. Small triggers below the large triggers. The large triggers are wide. They're angled in the direction of the trend. We haven't reached this key area of support just yet, and you'll notice on the 5-1, you get a reversal bar that doesn't quite make the areas, guys. We don't need to chase the trades because back testing, forward testing, live testing has shown us that more often than not, the price comes back. Here it comes directly to an area of resistance inside of favorable large triggers. And guys, this is a pretty simple trade that runs from 81.90 all the way down to 81.61 to Fibonacci support before it ever even blinks an eye. So do me a favor, give me a Y in the room if you're with me. Odds favorable momentum, no termination conditions, and then recognizing that area inside of favorable large triggers to get you into the market. So this is the S&P from today. I'm going to scroll back just a little bit, and you can see the market had been trending down all morning, right? You can see where the smalls begin to break away from the large. There's one of those tails, and there's actually quite a few of them here. Oops. Let's start circling tails. Odds favorable, there's a tail. We see it again, and this one hasn't quite reached the area. So my job to be able to study this best of the best look is let's go back to our first circle. On our first circle, price pulls back directly to resistance inside of favorable large triggers. The rules have been met for a high probability trend trade. On our second circle, not the best trigger line anymore, right? We have a little bit of split and the areas kind of fall in between, which means it may go low, it may go high. We're looking for triggers to be trending one on top of the other, but everything says down. Odds favorable on both, and it closes the gap to those large triggers. Probably an elevated amount of risk on this one that the average trader isn't going to be willing to put on, because your lowest area is at 32, and then your highest area, those trigger lines are all the way up here. It turns into a pretty aggressive amount of risk. But if you're patient, here's that next one, right around 5:40 this morning. Odds favorable, no termination conditions, picture perfect pullback to an area of resistance inside of favorable large triggers, and this one finishes the move right down to support. So even if we eliminate this one, we're looking at two picture perfect trades over the span of about 3 hours in the middle of the night if you woke up early. Guys, your day could be done based just off of those two trades. And then the S&P is pulled down. We've broken every one of our areas. You can see how support begins to act as resistance. All of the trigger lines remain below this area of resistance, so we're not looking for long trades just yet. But it's a little out of sorts to look for shorts, which means that we're into that mode where 90% of what we do is just reading the charts. Your crude oil, small trigger lines have broken above. The triggers are wrong, so wait. We've got some great pictures. We're going to cover all that in a moment. Odds favorable momentum, the small triggers above the large are wide, they're coming through. And there was a pullback directly to support inside of favorable large triggers. If you enter this market at 66, right at that mid-band, when the market comes up and we get that lower divergence, remember those losses of momentum where you begin to see change in the market, gives you an opportunity to reduce your risk, maybe manage out of a trade, opportunities for quick profits as you come through, because this is a 50-50 trade. Small triggers are through, the large triggers are still working their way through. And remember, we talked about perfect entry conditions on the 5-1 as you look for these trades, because these are areas with the potential but not guaranteed to break just yet. And slowdowns on your 5-1 begin to remove that advantage. You can see exactly how the market begins to behave. So there's our live charts coming in. Crude oil's open, the S&P just open. And if we scroll back, Let's take one more picture. And what we'll do is we'll take a study picture here. So we can scroll back historically and take a look at what we're looking at. And I've got a high probability trend trade checklist, something to let me make sure that I'm following my rules. Keeps me in a position where I can police myself a little bit. I'm going to give you guys a copy of that right now, that high probability trend trade checklist. Let me find it real quick. I'm going to upload this into the classroom, guys. If you begin to get in the habit of using this on every trade, you're going to be able to identify all of these advantages. Guys, this is a termination condition that creates a full reversal and gives us odds favorable momentum. So that means that the market is coming from a good top or bottom. My small trigger lines are below the large. The large are wide. They're angled in the direction of the trend. I absolutely have odds favorable momentum. We have not reached this key area of support yet. There are no termination conditions. And then you can see I went back and circled the tail. It lines up directly with an area of resistance inside of favorable large triggers. This is a 100% checklist met high probability trend trade. So guys, do me a favor, give me a Y in the room if you're feeling comfortable with identifying one of these trades. If there's a specific part of this trade that maybe you're not on board with, maybe you're curious about momentum, maybe you need a little help with termination conditions, identifying the entries, let me know. Let's go through and talk about it a little bit. John Novak's putting a million pictures in where to put the stop. Great question, Bob. We'll use this exact same picture for that as well. And I'll use my stop button here. So as we enter the market, when it pulls back to this area of resistance, initial stop's going to go up here outside of that window of opportunity, and it's about 12 to 14 ticks typically. And what that does is it puts the stop where the market shouldn't go. With this much momentum from a great top and nothing in the way, the market shouldn't pull beyond those large triggers. So that's exactly where we're going to put our protective stop. If the market goes up beyond that, just don't want to be in that trade anymore. When the reversal bar down is formed, going to reduce risk right above that reversal bar a tick or two. So if we're in at 07, we've gone from 12 to 14 ticks to right about 8 ticks. And then the market begins to move in the direction of the trade. Typically, Fibonacci support is a great place to exit the market. And this turns out to be almost 25 ticks, $250 per contract. If the conditions are such that you're going to hold this trade and you say to yourself, I've got great momentum, I'm going to keep taking this to the next area, this pivot right here on the 5-1 is your next stop movement. When the market creates a small pivot in the direction of the trend, in the direction of your trade, putting your stop behind that pivot puts it in a place now where the market shouldn't go again because it's already experienced that retracement. It's already begun to move in the other direction. Does that make sense, Bob? And management is very much the second part of what you do. Ultimately, identifying your best spot for entry should be your goal for the first couple weeks, making sure that you can recognize that perfect spot for entry, becoming very familiar with the looks. Identifying the areas of support inside of favorable large triggers, and just like this one, Bob, the initial stop will go down here where the market shouldn't go. As it moves in the direction of the trade, you can identify your targets and risk gets reduced. So let's get the market live here. 9:40 a.m. Guys, I'm going to come back. Remember, we do have news in 5 minutes. There's going to be high impact news in about 5 minutes. I'm going to leave the S&P up. It'll be fun to watch. I'm going to scroll up to the top where we started this morning, and we're going to start looking at some of the charts that you guys have posted in here. Joel got us moving at 4:35 in the morning, and we're just going to take a look at what he's doing. He puts a big sign there that says never trade against the 21.3. If we look at his 13.2 chart, small triggers are above the large triggers. There was a little bit of divergence here. You'll notice that he lets every trigger on a smaller, faster chart get in the direction he's looking to trade. His chart reading identifies a potential trouble spot in the form of divergence, in the form of a mid-band. He's able to take quick profits. He's identified that third divergence in the same location may reverse the trend, and the market does in fact reverse. Joel, great trading, great awareness. You had the advantage on every chart, and you managed it beautifully. Nice job. I believe we saw this one earlier. We just talked through the stop placement on this one. Odds favorable. First target happens to be right at that mid-band. Second target right there at Fibonacci support. Picture perfect. Every advantage. And since it's the first short against a strong uptrend, took a little more conservative profit target, got to a zero loss level. Beautiful heads up trading, John Novak. Rules based. All right, this is a chart reading. This is a chart reading picture, guys. This isn't a trend trade at all. What this is saying this trade looks like a trend trade, but it's barely a pivot stop out on the highs. And the lesson on this one is your large triggers are below your synthetics. Guys, I want you to identify, and I want you to kind of burn this one into your mind. When your large triggers are on the wrong side of your synthetic triggers, the likelihood of success on your trend trade decreases. And you'll notice potential long here, everything says up. Not the best situation. Smalls are inside, divergence is printed. And then when everything rolls, it creates an opportunity to go in the direction of the trade. So we're going to look at a lot of these pictures today, talking about what we see in the trigger lines. And guys, just a little heads up, as I scroll through and look at your charts, whoops, this is my view. So I've got you here. Whoops, man, I'm all over the place. I can see the chat room, but I have to scroll up and down to look at pictures. Gary taking a perfect trend trade. Reversal at the Fibonacci area, letting you know that it's a good top. Odds favorable, no terminations, pull back to the mid-band. Everything about this was a beautiful trade, Gary. And then as we get through here, we get into that medium probability trade. Still a great looking trade. Every trigger line has broken through the area of support. Support's going to act as resistance. No divergent. Well, we have one slowdown on the 5-1, but we have those strong triggers, large below the synthetic, pulls back directly to the area of resistance inside of favorable large triggers. And Gary's added the 8-range chart into the mix here too, which means that he has odds favorable momentum on a little smaller, faster chart. Gary, picture perfect entry, and this great entry makes these trades very manageable. He takes his first profits right at the first trouble spot, gets to a zero loss, maybe a little quick on the stop tightening. Same picture, every advantage coming through. And Gary, quick profits, zero loss. You're out at the next potential trouble spot right there at the divergence with the small triggers inside. Great trading, Gary. What a great way to start the day. $500 isn't so bad for a couple minutes work, right? Oh, Paul, I just saw your question. We did not bring the dog on our road trip. That is my youngest son's dog. And I miss her. All right, I'm going to scroll down real quick, make sure I'm not missing any comments. Market halter several stocks due to exchange-related issue. Bob, I'm not sure what that means, which is okay. One thing that I try to do, guys, is I'm just going to trade my indicators. This is the S&P. We're coming into news right now. But even from news, termination conditions, working like a champ. Every trigger line agrees. The market tends to go up. Now we have one of those 50-50 looks. Smalls are through the area, large are not. Divergence is printed, smalls inside. Waiting for a little bit of confirmation for areas to clear. We also have 10 a.m. news, guys. This one didn't seem to move it too terribly much, did it? We're coming down, we're looking. Termination creates a full reversal. Full reversal gives me odds favorable momentum. We're just going to clear a couple areas. And then we'll begin to look to resume the trend. The market stopped? Okay. Yikes. I'm going to come back, click on some of Gary's pictures again. We're going to see where we're at. Looks like Paul's giving us one today. Smalls below the large are wide. They're angled in the direction of the trend. Pull back to the area of resistance inside of favorable large triggers. Paul, you get in. That divergence prints, takes you out. You're just going to wait for the next opportunity. Take 100 trades. More often than not, that one's going to get you on the right side of things, right? It's all about statistical advantages. Same pictures, Alex. Good morning, Alex. Same trade. Looks a little different on yours. Everybody seems to have a different look here. Smalls below the large are wide. They're angled in the direction of the trend once again. Pull back right to resistance inside of favorable large triggers. When that divergence prints right off of that area with the potential to break but hasn't broken, the market pushes up just a little bit more. Gary, same trade. 50-50 trade. No divergence on the first one, but you see divergence on your 8 range. Gary, once again, using that 8 range chart perfectly. Identifying divergence, even a reversal bar on a 50-50 trade. Guys, as you grow with the software, you will move from 2 charts to 3 charts, and that 8 range becomes a great conversation. Alex G, this was yours. When this divergence prints, oh, this was Gary's. Let's get to yours. So Alex, exiting with a divergence, totally up to you. In this situation, you've got the odds favorable, but it is a 50-50, and I think it's important to recognize this area has the potential to break, but it hasn't broken yet. And it was your 8 range chart, Alex, that gave you that information. When this reversal bar happens, when this divergence happens, and even when this HVA, and this is a great picture on 50-50 trades, guys. Let me take it and we'll talk about it. When you get a reversal bar and a breakout bar, this high volume area prints. And when this high volume area prints, this becomes your trouble spot. And you can see that it lines up perfectly with the fib. For me, I'm tight stop, and then I'm going as tight as I possibly can into this. So it's either going to break on that 50-50, or this is my indication that it's probably going to push higher. Take a couple pictures of these, Alex. Learn to manage it. But if you're using the 8 range, it is divergence on a 50-50, and then that high volume area kind of confirms that this bottom may be sticking for just a little bit. Hopefully that helps. Take a quick break, see what happened here. 50-50, not quite. We're right into that resistance. Just going to let it clear. We'll see how these fibs hold. Divergence on an area that hasn't broken yet may push the market down a little bit lower. We'll let them resume and figure it out. And we'll keep looking at charts for a minute while we do that. Gary, that was the same picture. Sorry, I clicked that one twice. As if you have a question about a chart, if you have a question about anybody's chart, it doesn't have to be yours, let me know. Gary, not an edge trade. I see the question right there. Gary, so an edge trade begins with the 21.3 strong in the direction of the trend. So odds favorable momentum on the 21.3, which means that when you're trading edges, looking for edges, maybe everything is strong down. It means that you're going with that overall trend, with that overall momentum, using a smaller chart. This isn't an edge trade. This is a counter trend trade. And this counter trend trade, more often than not, this is why the picture came up. That counter trend trade typically results in a separation of you and your money. Does that make sense, Gary? Awesome. Perfect. And I love that you're going through and posting these simple little questions. Creates a great conversation. And then Gary, if I see edge trades set up throughout the day, we'll make sure that we get a picture for a little comparison on there as well. Guys, here's a great picture. If you get a trend trade that fails, stops you out, everything is strong, that third divergence prints, and you're saying to yourself, well, that one should have worked, but it didn't. This is a great picture, once again, on how you can identify resuming the trend. If I take a perfect trend trade right here, everything looks great, but that third divergence prints, takes me out of my position. That's okay. If I let these small triggers roll, and remember, I still have the 13.2 advantage. Strong triggers, no termination conditions. This is your continuation look as it stabs right back to that mid-band, but now the small triggers are up rather than down. 9 out of 10 times, this is almost going to be the identical price. And then the market continues up. If you take the trend trade, that lower divergence pushes you lower once again, allowing those trigger lines to roll, and then looking for the opportunity on that little stab back. Notice that the price is almost identical. I think that one of the challenges that new users face, and I'm going to show you this one on the picture, and let me know if you've done this, because I think we all have, right? Is we take this trade, and then we get stopped out, and we take it again, and we get stopped out, we take it again, and it comes back, rather than taking multiple trades, because this one doesn't have to go back up. It may continue right back down. Letting those small triggers roll before you look for the potential again is a great safeguard. And what it does is it keeps you from forming an opinion about what the market's going to do. Well, I think it should go up. We don't control the market. It may go down. That small trigger roll is a great indication that things are continuing. Let me see where we're at here. I love that picture. And then it looks like that was happening live on crude oil. There's that trend trade. The lower divergence pushes it down. The triggers haven't rolled. There's no reason to keep buying blue lines, hoping that the market goes in the direction of the trend. Great pictures this morning. Looks like we have one of a trend trade short. Gary, this would be the idea of an edge trade when everything on your 21.3 is screaming down. Everything is below those areas. You can identify the areas that are likely to stop the market and then take a more conservative approach on a smaller chart. 10KM, good morning. Let's see what you said. Little too far from the triggers to enter at the fib, at the mid band. Small trigger is gone on the wrong side. Large chart is weak. Termination is close, so skipping it. No worries. 10 km, great job analyzing. Great job looking at what you're doing. But let's talk about some of the advantages here too. Everything says down, but not with the strongest triggers, right? You're recognizing a little weakness, but we haven't reached the key area yet. There's still room to get there. Every trigger is down, and your large triggers are below your synthetic. I love that look. Oh, that's just a mid-band. Those aren't synthetics. But we also have odds favorable on the 8 range. 10 km, this is a great opportunity. Take that trade, and you're only running one trigger on here, it looks like. Nope, there's your synthetics, there's your large, everything down. It's on the other side, so you chose not to. If you take this trade with everything saying down, there's your first trouble spot. Maybe a great picture, take and manage because of the advantages, understanding that it is medium probability. And then coming from that termination condition, odds favorable. Didn't make it to the mid-band, so you didn't take the trade. Great job following your rules. Awesome job following your rules. And then this one meets your rules. Everything's coming down. You take the mid-band, making money. Everything says down. You're making money. And I think that goes back to this one. All those advantages looks very similar. Take and manage, right? Great job. All over this market today. And then we get a termination condition that creates a full reversal. Strong triggers coming right into that mid band. There's that picture perfect entry. You take the pivot stop out. And that lower divergence, you manage out of the trade. Perfect. Quick profits. Zero loss on the second contract. Really impressive trading today, MD. I've got one more here. Guys, I've got medium impact news coming up in about 2 minutes. Medium impact in about 2 minutes. I lost my place in pictures here. Here we go. Termination condition creates a full reversal. Odds favorable momentum. Did not do it. Mid-band still held. Big one. Triggers crossed yet. It's not a strong top. Skipping. No worries. Guys, that's the beauty of it, is you can say this isn't my trade. NG, divergence on a 50-50. That's not everybody's bag. But once again, guys, I like to encourage you, even if it's not your trade, go back and look at it. Divergence from a fib, a little bit of overrun there, right? Crazy momentum, the best of the best look. I've got synthetics down. I've got the large working below the synthetics. The window of opportunity, whoops, that's the wrong one, is itty bitty right there at that mid band. I've got odds favorable momentum. And I think if you look at the 8 range, it's the exact same look. So I've got 10 things for, 1 thing against. Doesn't have to be your trade. But I always encourage you guys, anytime you choose to skip a trade, go through after the fact when the emotion's gone and kind of count the things that were for it, count the things that were against it, and see if this is something that creates an advantage that's worth taking and managing. And the divergence on both the 5-1 and 8 range at the same time on a 50-50 makes it more like a 20-80. I agree 100%. And 10 km, this is one of the great lessons that I've had as I've grown with the software. You start off looking for the best of the best, and then you learn to read your charts and you read everything and you try to trade everything. And then you get conservative because you don't want to break those rules with the chart reading that you see. And then you take a deep breath, and when you come back and kind of analyze everything after the fact, you're like, man, I had so many reasons to take a shot at this one and manage it aggressively. And as your chart reading grows, so does your ability to do that. Great pictures this morning. Great trades. And yeah, this is a very real comment. It hurt me after I saw everyone taking it in the owner's room. Remember that everybody in the owner's room is at a different place. Everybody in the owner's room has a different plan. Everyone in the owner's room sees things differently. And it's our jobs as traders to give ourselves the highest comfort level so that we can go into these trades rules-based, anxiety-free, and just let the trade do what the trade's going to do. Let the advantages get us where we want to be. Bob72, you posted a picture. I love it. So Bob, we have a termination condition down at the bottom. We're just going to walk through. And you said that you were stopped in the circle. So let's see if we can figure out why. At the time of entry, I'm going to take a picture of your picture. And hopefully you're in here, Bob. So this is a great look for a market that has the potential to reverse. This is a termination condition, a 100% textbook. Our Fibonacci support above that has large triggers well above it. And at the time of entry over here at 836, Bob, you're going short directly into an area of support that's likely to stop the market based on trigger line location. Does that make sense? And this is our rule number 2. And this is a wonderful rule that kind of keeps us on the right side of things. Other things that I notice on this one, your synthetic triggers, which means that your large triggers here are still pointed up, which means that we don't have the momentum we need to really give us an advantage. The smalls are down with a little bit of strength. The large are still up and above areas of support. Bob, you have a great opportunity here to just hang on a minute and let the market figure out which way it wants to go. And then we'll wait for that advantage of momentum and start looking for the high probability trend trade. Great picture. Thank you for posting that. And if you just get in the habit, you keep posting these pictures over and over, what you're going to find is that we're going to be able to identify things one by one until we get it exactly where you want it to be. And then John Novak showing that same one, that first trend trade on crude. Remember we talked about that? If that perfect trend trade doesn't work, wait for everything to roll over. A little bit of patience goes a long way. Great pictures today, guys. Bobby T, let's see what you did. Bobby T says, man, I can't miss this one. Look at that checklist, 100%. Is the market coming from a good top? Absolutely. Odds favorable momentum? Absolutely. No termination. Has that clear path? Area for entry? Bobby T, you said you got scared because of the second pullback. It happens. Got stopped out. Once it went positive, you bailed. You're an Aggie. That's a Texas joke, guys. I love everything about this one. And notice that your small triggers are still below everything, Bobby. This is a great look, and you still have odds favorable on the 8 range. For me, this is a look with this much momentum that says keep my stop up there where the market shouldn't go and give it a chance to work itself out. It's a great looking checklist trade. Once you start watching ticks, right? Because you start watching it go up and down, and it plays with your brain a little bit. That's when I take a deep breath. That's when I say, man, I've got the advantage of momentum. I've got smalls below the large on every chart. Every chart is red, and I'm coming from a great termination condition. They're going to have to come get me. Those guys are going to have to pull up on their bootstraps and fight their way through every advantage that I have and grab my stop. No way I'm getting out of that one. And it takes a while to get to that point, to stop looking at ticks and really focus on those advantages that got you into the market. Because remember, guys, your 5-1 is an entry chart first and foremost. And then that 5-1 is going to get you into the market. And until you have a reason to change, like 3 divergences, a higher, lower divergence with the smalls inside, it's a great opportunity to manage. And then here's that same picture. The higher divergence is good. All of the trigger lines roll the first trend trade, and then there's that opportunity for the second entry. Since a 5-1 larger below the 13.2, he'll get out break even if a lower divergence is true. Great order of operations. First trend trade. First trend trade doesn't work. Let everything roll because the market says we're more than likely going up. Higher divergences, areas likely to hold. Gives you that second opportunity. Great pictures today. Let's see where we're at. I think we're almost through them. There's Bobby T. There's John. That's me. All the triggers roll. I think we just saw that one. Then Paul says he got away with one here. Not sure he likes it that much after the fact. Let's see what you did. Same concept, right? Second higher divergence. The triggers are outside, so you're going to manage it as it pulls back. Quick profits, not willing to lose. You had odds favorable. Paul, I think what you did, and I like this, is you had an area likely to hold, but you don't have momentum. So that's the one advantage that you give away. But smalls are up, large are up, every trigger is up. The smalls are below the large, so you manage it tight. Picture perfect entry, great stop placement, quick profits, not willing to give it away. I think it was a great read, Paul. I think you had enough advantages to take and manage, right? And the market almost always goes where it's supposed to go. That's the part that you got to learn to believe. And it takes a little bit. And then Gary says this one kept him out of the trade. Losing momentum, losing momentum, losing momentum. Gary says, I'm not giving away that advantage of momentum. Gary, great chart reading today. I love everything that you're posting. And your P&L reflects your ability to wait for those advantages. Nice job. And that's exactly what John's talking about. Divergence on both of these is typically going to push you past that best one. Little reminder, if you get stream full in Discord, guys, we are streaming live on YouTube. Let me copy that link real quick. I'll put it in the room one more time for you. I want to get through these charts real quick, and then we're going to go live market for the second hour. Figure out where I was here. Paul, Gary, who's next? That's a good looking picture, isn't it? Everything says down. Look at that beautiful pullback right to resistance inside of favorable large triggers. Profits at the first trouble spot at a zero loss, looking for larger profits. Nice. Bob, I apologize if I missed your question. I hope I answered it. You said you shorted, and then you asked why. One thing that happens, guys, is I go back and forth. I don't always see the questions in the moment. So I want to make sure we answered it, Bob. Every trigger line above the areas of support, larger up. We just don't quite have. Okay, good. I just wanted to make sure. And guys, if I ever miss a chart or a question, please, please, please ask it again. Ron C., remember we said sometimes you're going to form a plan that isn't a high probability trend trade. You're going to learn to use the software the way it makes you comfortable. Odds favorable momentum through every Fibonacci area. Ron loves to hop in, hop out, make that money. Took a quickie. Great trade, Ron. You guys notice how this is not a high probability trend trade, but what it is, it trades with direction, it trades with momentum, it trades with a clear path, and he doesn't get greedy. He says, let's make some money. Great job. Gary, same picture. 000, nice to see you in the room. I know you're on demo here. I love it. Taking a momentum style, path is cleared, quick profit, 000. I think you took a page out of Ron's book here. Everything said down. You hop in, you hop out, no worries. And then with the advantages, great looking trend trade, quick profits, and it was this second divergence, 000 with the small triggers inside, lets you get out zero loss. Amazing trading. Welcome to Nexgen. I know that you're on my list of new people. Thanks for posting. Thanks for asking questions. And Bob, termination conditions, identifying those. I saw the question in there. Yeah, Ron, I knew you'd like that one. Guys, under Fibonacci tops and bottoms, when you come through, I've got a video right here, and this entire video, what it really focuses on is trigger line location, identifying areas that are likely to stop the market, and even more so, recognizing when those areas are likely to break. Yeah, 000, whatever makes you comfortable. I want you to see this. That's your trade right there. Everything clears. Let me show you Ron's trade. Ron has been working on this one as well. Almost identical. Same concept. So what you're going to do is you're going to figure out what works best for you. Take a bunch of pictures. See how often it works. And what you'll find is you're going to find something that gets in there. Yeah, Bob, sometimes you miss the reversal. Try to get into the middle of the move. That works sometimes if you have that odds favorable momentum. And if you look at Ron's chart, there's a couple things that you'll notice. Fibonacci support has been broken. The momentum is crazy strong, and there's a lot of room to get to that next key area. And Ron's formulated a plan. 000, just kind of saw it as well. And this creates a different style trade where you're simply relying on momentum. So great stuff. And then John shared, guys, 7 Habits of the Highly Successful Trader. He just shared that PDF in class with you. This is a great read. It's a Mark Douglas, isn't it? That says Mark Crisp. Great read, just about the mental side of trading a little bit. Yuri, good morning. Yuri, taking that. You've got strong here. You've got weak on the 13.2. You take a quick entry. Divergence on that 5-1. Yuri, giving away the advantage of momentum for sure. 50-50 trade on the 21. Weak triggers as you come through the key areas. You've also got weak triggers on your 5-1 and divergence on your 8 range. That was kind of a tough one. Little lower probability, I think. And that one came up and got you. Guys, keeping me busy today. I sure do appreciate it. Paul catching the momentum style. Nice trade, Paul. Pivot stop out. Not the best bottom. You do have that momentum. Full change. Everything says go. Odds favorable. Nice conservative exit at the area likely to stop the market. And then 40.18 to 19 key spot on ES. We'll see what happens. Trading into that resistance, right? It did break at the key area. And now that ES is pushing up, isn't it? Anything can happen triggers. Large and synthetic, everything's up. Not a high probability trend trade. There's your loss of momentum as well. Guys, I'm going to leave this up for you. We'll see what happens with this loss of momentum, see if it decides to push lower. I'm going to take just a minute and go reload my water. I am parched. And then when I come back, let's read some indicators. Let's go through some pictures. If you have questions, raise your hand, post them in the room. If there's anything that you need, let me know. Post your questions and pictures. We'll hit them when I get back. Guys, I'll be back in just a minute. All right, let's get back into it. Ooh, looks like I left that live mic. Sorry, guys. What did we notice on the 13-2? Anything can happen triggers, giving away the advantage of momentum there. We're able to confirm that loss of momentum on the 5-1. Small triggers are inside of the large triggers already. So anything can happen on two different charts. All right, I should be good. Can you hear me? Guys, give me a Y in the room if you can hear me. Okay, cool. Yes. Awesome. Anything can happen. Just chart reading here, right? Identifying change. We overrun this key area at 25.33. We're losing momentum right here on the 13.2. Small triggers inside of the large and divergence lets me know that we're losing momentum on the 5.1. Guys, if nothing else, it keeps you from looking for that continuation off of 25. We're recognizing this change, and now we're pulling into this area of support. Small triggers are through with momentum. Large triggers haven't broken through yet. No divergence on the 5.1, but notice how far above everything is. This is what we call a 50-50 trade. Then I'm looking at my 8 range. Do I have trigger lines that support continuation down? Large triggers are well above. Large triggers are up here at 22, up here at 22. We'll see what happens. Yuri, so I would say 85% high probability trades. If the conditions look great, sometimes I'll take a medium probability trade in the form of a 50-50, or I'll take a continuation trade when the rules are met and everything is solid to get to where I'm going. But what I have recognized in my time with Nexgen and teaching this is that, and I've put this challenge out in front of a lot of people that tell me that they are inconsistent, that they feel like they're chasing too much, that they're having trouble getting to the win percentage that they want to be at. I've put this to, I don't know, maybe 100 people, and maybe 4 have done it initially. When you follow the high probability trend trade checklist, when you can honestly check off each one of these boxes, I don't think I've had anyone report back to me with a win percentage less than 83%. So why do we take those medium probability trades? Well, because people like to be busy. Because there's an opportunity to make a lot of money with the medium probability trades. And skipping a medium probability trade doesn't mean that you have a more conservative plan necessarily. It means that you're missing out on an opportunity, and the potential is really there. So you could focus, and I like to focus on the highest probability trades for the first 30 days, just to teach you to read your indicators, right? To get to where you can manage trades, to where you can take medium probability trades. And this is a great plan. High probability trade doesn't work. Wait for everything to be in the right direction. Wait for everything to be in the right direction. And in a strong one-way trend, you will keep taking medium probability trades. If the market's swinging back and forth, they don't work as well. So, for example here, medium probability trades. Smalls are through the area, the large are not. No divergence. It didn't make that area inside of favorable large triggers. So now we kind of wait, and we're waiting for the absolute best of the best. And here we have an awful lot of indecision, don't we? Termination condition. Guys, you're witnessing a fight between buyers and sellers here. And RJ, initially, let the key word be initially. The reason I'm such a big proponent of high probability trend trades for the new users, and I'm going to go right back to the user guide for this one. The most important skill I believe that you can develop is reading your charts, reading your indicators, taking the information that it gives you, and being able to identify advantages, and just as importantly, being able to identify disadvantages. And that's another reason why when we talk about the rules, we talk about the advantages provided. And then RJ, when you take a little time, when you focus on those best of the best entries, then you put yourself in a position for those medium probability trades. And I want to read this because I think that this is important. The medium probability trade is a trade when most of your indicators line up for a trade, however a small issue exists. Your ability to read your indicators is going to provide you the ability to identify that small issue, and it's going to give you the ability to understand whether or not it's detrimental or whether or not you still have advantages in place. When executing your medium probability trades, you're going to take these trades and manage them assertively. Once again, your ability to read your indicators, to identify those divergences on the 5-1, to have an understanding of trigger line location is going to let you manage those trades assertively. It's going to let you identify trouble spots and getting to zero risk. And you're absolutely right. You're going to wait a long time for high probability trades sometime. But if you commit, remember, this is a marathon. This isn't a sprint. This is a skill that you're developing over time to carry you through the rest of your life for financial independence. This trade sets you up for beautiful execution on this trade. It gives you the opportunity to recognize advantages. It gives you the opportunity to manage trades, to see things faster and with clarity. And then John just put this note in there. A new trader sometimes wrongly assumes that by not taking medium probability trades, their results will improve and somehow may avoid the risk of loss, which isn't true. If you don't take those trades, you risk losing the opportunity to make more money. And more experienced traders will execute all medium probability trade setups, manage them tightly. And the sooner you take these trades, the sooner you'll feel comfortable, giving yourself more opportunities to win. John had a third cup of coffee today. Look at him go. So focus on the high probability initially. Focus on finding the absolute best of the best, and then put yourself in a position through that focus to identify change, to identify advantages, to recognize that when there's no divergence, everything says down. If you sell that mid-band, this divergence becomes your key to not take this trade. And I think this is a great picture right here. And let me take this one because this one illustrates identifying change that you may not see initially. This area has the potential to break, but it hasn't broken yet. This is what we call a 50-50. With no divergence, this becomes a great looking trade with all of that momentum. Absolutely nothing says that the market is slowing down yet. If nothing else, this momentum is going to carry us. But then you get a loss of momentum. Then your smalls begin to work next to your large. And notice that this one doesn't work. So it becomes a progression. First, you take the advantage of a clear path, 100%, nothing in the way. Take that trade all day long. And then from there, you begin to recognize the highest probability, medium probability trade, if that makes sense. You still have momentum. Everything still says down. No slowdowns. This becomes your next trade. And then it's your ability to read the charts that helps you identify that you're losing the advantage here, that isn't your best of the best. So I would never tell anybody to only stay on high probability trend trades for the rest of their life, but there's people that do it and they do just fine. But there's a lot of opportunity when the conditions are correct, when your chart reading is solid, to take these medium probability trades. Does that make sense, everybody? And Gary, 50-50, not a trend trade. Divergence prints, just like we just spoke of. And it just pushes higher. You lose that advantage a little bit. It happens sometimes, right? John says, if Elon Musk said, I'll pay you $1 million a year to do nothing for 2 hours and then make a few mouse clicks, then do nothing for 2 hours and make a few mouse clicks, then wait an hour, make a few more, would you take the $1 million a year job? Everybody in this room would say yes, right? Everybody in this room would say, absolutely, I'd take that job. What a great job. Sometimes it's hard to fight human nature. Large triggers are below all these areas, aren't they? Resistance is likely to stop the market. Small triggers are up, large triggers are down. Little indecision in a definite holding pattern. If this market's going to continue down, everything's going to roll and head south. If this really is going to be the stopping point, all your triggers will agree again for a trade. Our job, and this is that wait for 2 hours and then do a couple mouse clicks. Our job is to wait for the advantages. And I want you to see this. If I just put trigger lines on this chart, everything agrees. Things don't agree just yet. And we're just going to wait for that best of the best. Justin, you took an ES short. Let's see what you did. 50-50 trade with divergence, and it pushes up higher, right? I feel like we talk about this a lot, guys, and I'm not opposed to 50-50 trades at all. And I'm not opposed to 50-50 trades with divergence, maybe in the right conditions. But initially, remember, we're writing the plan to create advantages. So this isn't the example plan. RJ, this is your best entry. Follow the checklist, right? This is the one that typically wins 70 to 80%. This is the one that gives you that advantage. This is the one that teaches you to read your charts. And then guys, get to that medium probability trade because there's so much advantage to be there. But when you take away an advantage, and let me quote when a small issue exists, you want to create a set of rules for that as well. And in the beginning, it may be on a 50-50 when that area hasn't broken. No divergence on the 5-1. And I even took a picture of this one. Let's see what it looks like. 50-50, no divergence. Guys, I want you to look at this picture. This is from December 22 contract on the S&P. Compare this picture to this picture that we just took. The market repeats itself. Patterns repeat itself. No divergence. Things continue back down. If I go back to that picture, the same idea. Divergence prints and that market heads up. This is the exact same look that we're looking at today. Guys, this is from a couple months ago. So creating those expectations through study, through posting in the room, through asking questions, I can create rules to help me take a medium probability trade. So you make sure, at least as a beginner, the large chart has all triggers. Read the small chart for entry. Absolutely. And that's exactly what it is, RJ. And then that muscle memory comes from study, right? So you can scroll back on your 13.2 and wait for those advantages. You can circle the tail on the 13.2 and you can see if it lines up for rules met. This is that muscle memory. And then more importantly, you don't have to do it alone. Like, this isn't something that you have to do on your own. If I pull up Discord from where all of you guys come in, there's a self-training section. And this self-training section will literally walk you through A to Z. And it'll walk you from super simple, the basic idea of everything that we're looking for. Termination conditions, let the triggers roll, look for an opportunity. Let everything be strong, look for a trend trade. And it begins to walk you through everything. It starts to walk you through odds favorable momentum, It walks you through termination conditions. It's just a walk before you run kind of scenario. What does a trend trade look like? When everything is strong, letting the 13.2 lead the way, with sufficient odds, buy low at support. Nexgen users, you know exactly where support is because you have the software. Use the checklist for every trade. So RJ, you're on a great path right now. And let me put a copy of this example plan in the room. Focus on the absolute best of the best. Take 1,000,000 pictures. Post every one of them in the room. Ask 1,000,000 questions, guys. It's job security for me. And then continue to grow on that path. So there's that 50-50 with divergence. And sure enough, it pushes beyond. And now the trigger lines are beginning to roll, but we're kind of stacked here, right? We've got a little bit of a range that the market's got to work itself through before you can really take an advantage. And notice where the large triggers are. Let's talk gap theory real quick. Remember, guys, all we're doing right now is chart reading. There's a theory called gap theory. When price accelerates away from these large triggers, and those large triggers remain more than a full bar away, meaning that they're all the way down here at that reversal bar marker, price tends to fill the gap. It's like a slingshot. And what this slingshot idea does is it begins to keep you, it's not necessarily finding a trade, but it's letting you know when you've given away an advantage, when that market's likely to do something based on patterns. This gap theory can keep you from taking a shot at a long right here, because those large triggers didn't follow. Do you see how that just worked live? And now the smalls go back below the large and the large start to come down. You recognize every trigger line has the exact same look now, don't they? Smalls below the large, large below the area. Everything's starting to come through. And we'll see if it gives us a little continuation down to this next key area. So it's that patience piece. Eventually you get a clear path. Eventually you get odds favorable momentum. And eventually that market pulls back to an area of resistance inside of favorable large triggers. But the identification of the large triggers not following gives you a very clear advantage to avoid this long trade that doesn't work. Guys, give me a Y in the room if you're with me on that. Gap theory is a huge part of everything that we do. And if you scroll back on a 13.2, this is a great way to study. Look for those instances. Price pulls all the way up to Fibonacci. The large triggers don't really follow. And it closes that gap right back to them. And you'll begin to recognize this pattern so often that even without the indicators, even without those mid bands present, I'm looking for an opportunity. That's all middle of the night. That was a strong trending. Watch this. I'm going to put only trigger lines on this chart. Even without Fibonacci, if you begin to recognize these patterns, if you begin to identify price accelerating away from these large trigger lines, you'll be able to notice that there's no advantage for long right in this area. And this is going to keep you safe. Maybe not. I don't know if safe's the right word. It's going to keep you from attempting that trade when the indicators are telling you that the market is likely to snap back. And then we'll get those indicators back on there and you can see it kind of real time. And we're just waiting for the advantage, waiting for everything to go the same direction, waiting for that clear path, waiting for that momentum. Guys, the market is a battle between buyers and sellers. We're watching that battle happen right now. 80.88 is a line in the sand by the buyers. Does everyone see that? Fibonacci support held. The buyers pushed and the sellers fought back right to the key area. Buyers pushed, sellers fought back right to the key area. Buyers pushed, sellers fought back. Buyers pushed, sellers fighting back. Is there anybody looking to go short into 80.88? I hope not. Because until this area breaks, trading into it is absolutely financial suicide. Paul, you stepped away for a minute. That's a holding pattern if ever you've seen one. Whew, you are trading a lot today. I like it. Termination condition, short right into the termination condition. Long on the momentum, made it back. Taking the long. Only short is a short walk to the kitchen. Large triggers on the 13.2 are flat, so there's no momentum. Which way are we leaning? Everything agrees down, right? But there's that big, beautiful blue line letting us know that it's not time yet. It may break. It may not. I don't have to know if it's going to break. What I need to be able to recognize is if it's broken. And it has. And I have odds favorable momentum. And I have an area of resistance directly inside of favorable large triggers. And this is a setup that 70 to 80% of the time finishes the move to the next key area. Give me a Y in the room if you're with me. We're seeing it live. I'm not calling trades. That's not what I do. But what I can do is identify rules being met, identify advantages being had. And do you see how that patience, it keeps you from being a victim right here? As those big pocket investors try to figure out what the heck they want to do. Let's wait for a clear path. Wait for the advantage of momentum. Wait for the advantage of an area inside of favorable large triggers. And based on this momentum, guys, where's the market likely to end up? Can we identify where the market is likely to go? Can we identify where the market is likely to continue? The only thing that you're in control of is whether or not your rules are met. The only thing that you have any say in is whether or not the rules are met. And we'll see what happens here. After a fight this big, buyers don't always give it up. But if the rules are met, the opportunity's there, take it. Especially if you're on simulator. Take it. Take a picture. Talk about it. Vocalize it. What's my advantage? What's my disadvantage? Where's my target? Guys, never got a strong trigger line, did we? If you took a shot at it, reversal bar lets you manage it, manage out of it. Once again, we're seeing that indecision. Just waiting for the advantages. We'll see what happens here. Small triggers coming up. Large triggers are down. Justin, let's see what you did, bud. Justin, you took a shot at it. No diversions, pulling back, everything said down. You said all my trigger lines agree. It's worth a shot. Stop behind that reversal bar, gets you out of this. Notice that your large triggers came below. Then they kind of That's such a key area. Everything agreed. It was a good shot. If it wins big. If it doesn't, you're out quick, and then you get to reevaluate. Dab chain. Let's see what you did, bro. Everything says down, right into that resistance. Stop where the market shouldn't go. And then it just becomes a waiting game, right? Everything says down. Enter right at resistance. Stop where the market shouldn't go. Good stop placement still has you in the trade. What happens if there's a second divergence? What happens if that market pushes higher? Small triggers are up. There's a chance we may retest that area of resistance. Identifying change on the small chart. And now we come into resistance. We come into a mid-band. Let's see what the 21 says. Odds favorable. Gary, this would be the look of an edge trade, but you don't just jump in. You gotta wait. Stopped out? That's okay. So dab chain, let's talk about what you had. You had the advantage of momentum. You had the advantage of no termination conditions. And you had the advantage of a tiny little window of opportunity. It gave you a reversal bar to reduce risk. Show of hands. Who's okay with this one? I would take this trade 1,000 out of 1,000 times, guys. So Steve B, Ron says he'd take it. And now we come into resistance. Here's that gap theory once again, right? Resistance, large triggers are a full bar away. Can we create an expectation, guys? We'll see if it closes the gap. It may not. But right now, I'm not going long. Steve B, if you go to the resource page with NinjaTrader closed, and pull that up, and you download the installers and run them with NinjaTrader closed, it's going to change that fib time frame for you. You don't need to build new workspaces. It's just a matter of the templates going in, changing it. So if you have NinjaTrader 7, you're going to go through, run the installer, and then once you run the installer, when you open up the workspace, it's already going to be there. If you only download the templates, then it's the same one. You're going to be looking at that 5/1/2023 Renko. And let me give you a copy from my downloads folder. Here are the templates for 8 and 7 if you just want to go that route. And guys, I want you to notice something. Oh, you already got it? Cool. I would have taken that trade because it was rules-based 100%. Ron, NG Time, just incredible. We know Gary would. It fits his checklist 100%, guys. Just a cost of doing business. Steve, I use it every morning, every afternoon. I'm having great luck with it. There's still the potential, but there is no we. It's you. I know a lot of people, because they're using Apex Trading, are doing it. I'm having zero issues with it. I actually like 8 very much. Guys, if you take 100 trades, 100 rules met, 100%, every advantage, here we go trades. Cool. I run 7 for the class because there's no threat of it crashing, but I'm doing my live trading on 8. Guys, I'll take this one every day. 1,000 out of 1,000 times. 2, Paul? Pretty cool. That $30 was a lot better than 3,000, wasn't it? Guys, what Paul's talking about, this Apex account, let me show you from the education page. Oh, you will. There's no doubt. You're just working through the transition of going from simulator to having a skin in the game. Guys, these funding accounts are great. If you think you're ready to go live, you can go through something like Apex, Elite, or Top Step. And what they'll do is they'll run you through a combine. They'll run you through a set of trading where you have to make a certain amount of money in a certain amount of time. You can't draw down so much. And the cost is anywhere between, I don't know, $100 and $500 depending on the size of the account. But so many people go, well, I'm ready to go live, and they'll go through a couple $1,000s. Guys, these guys give you the first 12.5 in Apex. You get 90% of everything that you make. Not for Apex. Dab chain, it's got to be 8. No way around that. Yeah. Gary, are you with me? I told you that if I saw one live, I would bring it up for you on an edge trade, right? So does Apex, I think. Guys, look at your 21.3. This was a question Gary had. I have odds favorable momentum to the downside on a larger time frame. I have resistance likely to hold on a larger time frame. I have the gap theory on my 13.2, mid-band, fibs, large triggers below the reversal bar. Gary, if you were to take an edge trade, it would come from somewhere up here, and you would want some sort of, and I'm not running the right template on here. Let me put market flow on there. If I put a market flow template on there, I would be looking for some sort of reversal bar from that key area to get me into a trade, to maybe close the gap, understanding that it isn't a high probability trend trade. It's more of a low probability trend trade. Not even a trend trade, it's an edge trade, which means that I'm counting on a higher time frame. I'm counting on Fibonacci areas to give me at least a push back. Cool. I knew we'd get one eventually today. That was a pretty good example of it. And then we'll see what happens, guys. A lot of times when the market doesn't quite make that key area, when the large triggers don't follow, this mid-band of resistance turns into like a bounce point for that continuation down. It's all chart reading. And then on our ES, couldn't get through that key area. Odds favorable, 50-50. If you took the first 50-50, you got a pivot stop out, weaken triggers. All right, Paul, let's get to yours real quick. Those small triggers don't look like they made it through. In the moment, they may have. Split triggers, that one's flat. I see what you were doing there. And then you did get the momentum trade, and it works its way back up. You just got caught in a range there. Bob, you said you still don't understand how to get into the trades at the right momentum. So, Bob, the first thing, and let's go through this. The first thing is making sure that your rules are met. So let's say, hypothetically, everything says up. I have odds favorable momentum, right? I don't have any termination conditions. And again, this is hypothetical. Let's get all these 50-50s off of there and go 2 triggers only. So let's say that the rules are met on the 13.2. Are you with me, Bob? And I'm waiting for a pullback to an area of support inside of favorable large triggers. I'm going to right click, and it's going to tell me buy limit 2 because I'm below the market. And Bob, this is literally what we're looking for. We're looking for odds favorable, nothing in the way. And when those rules are met, I can have a limit order simply waiting for the market to come back to me. And this is the key to rule number 3, is just identifying that advantage on the 13.2, identifying your window of opportunity on the 5.1, and you'll literally wait for the market to come back to you. So if I were looking for this trade back here, my limit order might have been just above that area of support. Everything's going up, and I wait for a reversal bar. At the time of the reversal bar, I identify my areas, and I simply wait with that limit order. And the market ideally comes back and fills me. Does that make sense? It takes a little bit. It takes a little bit of practice going through. And then to help you identify, you can go back historically and look at when those rules were met on the 13.2 and just circle it. And what you'll recognize is you'll start to get that visual of that best area for entry. And it'll help you get into the habit just through repetition of feeling comfortable with what you're looking at. So as we come back again, nothing but trigger lines on here. If I circle that tail, that's that potential entry, and I come back on my 5.1 chart, let's see what that tail looks like. Once again, it's that pullback directly to the area of resistance right there at those triggers. And it pushes back down. In which example, Bob? This one? Stopped at break even? Probably. But if you got in at 25.50 and this market went all the way up to 29.25, as you learn to manage these trades, if I'm in at 25.50, 25 and a quarter, my first profit target is probably going to be at that $100 right as I'm coming through and I'm looking at it. And then Bob, 2 divergences with the small triggers inside. That divergence is true right here. I'm out for 2 or 3, for maybe a point on the second one. So I'm at least 3+ on that trade. Conditions change a little bit, and then I just simply wait for the next best. So the idea is that initially, let me put my indicators back on here. The idea is that initially, I'm going to focus on my entries. I'm going to use that high probability trend trade checklist. I'm going to keep a very conservative approach. And then Bob, I love this one. Let me share this with you. As you're getting accustomed to Nexgen, because we're not looking to change everything that you're doing, maybe a way to accompany it. Defining that management plan. If all you're focused on is your best of the best entries, letting management be very mechanical tends to be advantageous. And that mechanical, RJ, I'm going to let you answer that question. Well, let's start with this. Where do we look for termination conditions, RJ? I like it. Great question. But Bob, in the beginning, keep it very, very mechanical, and it works out on the large chart. So let's see. Look at your large chart, RJ. You tell me, what's the best course of action right now? We've hit resistance, 1-to-1s, no trigger lines through. Absolutely. It is 100% free to wait, isn't it? It's 100% free. And look what's happening. Even if this doesn't stop the trend, I've got divergence. I've got smalls inside the large coming through. Guys, I'm going to do 2 things. I'm going to take a quick break. And then when I come back, and Bob, this may help you. I'm going to go through and I am going to show this mechanical approach to management. I've got a set of pictures that go through. I'm going to share that with the class. We'll talk about it a little bit. Let's see what this termination condition does, guys. I'll be back in just a few minutes, and we will get back at it. The last hour belongs to you guys. The last hour is all about you guys asking questions, you guys posting pictures. I really want you to drive the direction that this next section goes. I'll be back in just a second. All right, y'all, let's get into that last hour. Have some fun. S&P 500, what's it doing? Right now, we've reached a termination conditions. We've reached a key Fibonacci area. Absolutely none of my trigger lines have been able to get through that area. Therefore, this is an area that may reverse the market. It's not guaranteed to reverse the market. There are no promises of a market that reverses. But what we do have is just a little indication that we've given away the advantage of a clear path. Rule number 2 isn't met. Once again, as you grow with the software, so may your rules, so may the things that you look for. A lot of things that I notice, my large triggers are below my synthetics at this point, which makes long trades a little less advantageous. Driving with the e-brake on completely. So as I've grown to read my indicators, I'm going to share a couple things that I notice. Anything can happen triggers, right? What advantage do we give away with anything can happen triggers? And I want to think of this chart like this. We've given away the advantage of momentum. It doesn't mean that the market can't continue up, but it means that we can identify that we're losing the momentum. I also know that my area is below my large triggers. It's not inside of my large triggers. There's no areas in my window of opportunity. So I'm giving away another advantage. And then I just start to come through and look. My small triggers are inside. And guys, this is a big one. Go back and study this. The large triggers are inside, or on the wrong side of the synthetics. And when those large triggers make their way to the wrong side of the synthetics, things tend to push down a little more. Now we have a second divergence. The smalls are angled down. It's kind of a trickle down. Termination says don't go. Loss of momentum confirms it. Lower divergence confirms it. And it just gives you an opportunity to not sit and hope. Synthetics are the ones that look stepped. So two trigger lines on the 5-1. There's your large and your synthetics. Your synthetics, this brighter green trigger line, are the large triggers from the 13-2. And just when everything is working in symphony, harmoniously, everything trends together, this is when you have the best advantage. If you come back and look at this one, you'll notice that the large are inside of the synthetics. The synthetics are up. The smalls are well outside. Tons of advantages here. But then as we get to where the market is currently, the large are below. Resistance has been reached. Termination conditions, lower divergence, trend changes, all these different things going on, letting us know that long trades have given away the advantages that we look for. Does that make sense? Hey, Buffalo Hands, great name. I like that one. We come up with some pretty good names in here, guys. 62 bodies in here, Buffalo Hands. If you can hear me but you can't see me, I'm sure whoever you're working with has already given you this one, but you can go to the YouTube page for Nexgen. Guys, this is all of you. YouTube.com, user Nexgen T3. This is being broadcast live. You can come through, you can watch it live. There's a tiny little delay, but it gets you where you can see what's going on and listen to what's going on. We don't have a momentum trade yet because we haven't formed a full reversal bar on the 13-2. We don't have a trend trade because we don't have the advantages that we need. Guys, we're in a holding pattern on the S&P, waiting for the market to tell us that we have the advantage to look for a trade. Come back to crude oil. Guys, there's that green box that we put. Do you remember that one? Where's the market likely to go? Gary, your edge trade worked absolutely beautifully. Price closed the gap to the large triggers, and it finished the move right down to that support area. We have a pivot stop out. My large triggers are still smaller below the large. The large are beginning to roll. Termination conditions, guys. Once again, termination conditions. Take the time to learn them. Create so many advantages for you. Just that identification. All right, guys, last hour. I'm going to go back to the home page. I'm going to go back to the manual. And I want to look at entries. And Bob, this is for you a lot. Identifying that best of the best spot. Let's look at trigger lines. When the rules are met on the 13-2, guys, you're 5-1. Small trigger lines outside, larger up, synthetics. We saw this exact same look on the ES just a few minutes ago. You can create your trend trade targets, but coming through and studying this best of the best look. Guys, these are not only in the user guide, these are also in the Discord page. Once again, great termination conditions. Creating full reversals. Look at how your large triggers are below the synthetics. They're both trending down. The market pulls back beautifully to an area of resistance inside of favorable large triggers. And because we have Fibonacci, we can identify where the market is likely to stop. And if those small triggers are below the large, one more trend trade to retest the area. These are available to you in the user guide. These are available to you in Discord. But I like to go through because the more you look at that absolute best look, the more it sinks in, the easier it becomes to recognize. Look at your trigger lines. Small trigger lines inside. Loss of momentum. Areas below. Didn't we just see this on the S&P? The exact same picture, isn't it? Small triggers inside, areas below, and there it goes pushing lower. The market repeats itself. Reaches support. After fibs hold, small triggers going up, not really looking for a short trade. Everything begins to roll. All triggers agree. And then it just kind of works its way. So, Gary, let's see what you did. Gary looking at the S&P, waiting for the reversal bar, right? No HVA trades because the triggers hadn't rolled. I'm not sure if they did down there or not. Yeah. Just respecting termination conditions. Second lower divergence. Look at that HVA line that formed as well. And that's the place where we got our third lower divergence. I think we took that picture earlier today too, didn't we? If you did take a long trade, you can use the smaller, faster chart, that 8-range chart, to identify. Now we have a reversal bar. Now the large are getting below the synthetics. The smalls are below the large. Divergence is printed. Do you see how we identified change on our smaller, faster chart? By identifying these termination conditions. Everything's rolled. Now we have the setup for one of those momentum style trades. Not a high probability trend trade just yet. See what it does if we get a little stab back there. Absolutely, RJ. So if we're looking for that high probability trend trade, we're waiting for those synthetics to roll. We're waiting for those to turn red. And then we're going to start looking for those areas that may end up inside of favorable large triggers. And at the same time, we're going to identify and respect if the market reaches, well, the mid band, that's your first target. If the market reaches support, looks like we're getting a little pullback potential. Large triggers are a full bar away. I think that sometimes just watching the market, everything's starting to roll now. We have that reversal. HVA short was the only trade after this held. If you're doing those shorts, for me, there's divergence on the low. Won't do a momentum because divergence is a loss of momentum. There's your 21. And then on our 8 range, I don't have my market flow template. Let me do that. If you're using market flow, let's look at what that HVA trade looked like. Oops, wrong one. Takes a second for it to calculate. Once it does, you're pretty good. Notice the distance back to the large triggers right now. No divergence on the pullback. Might not be the same. Yeah, I don't think it is. Remember the gap theory? RJ, you're filled at the mid band for the short. I'll let you do your thing. Nice read. Medium probability. Oh, smalls outside, larger through. Smalls are through, synthetics. Window of opportunity, right? Big fights going on in crude oil today, guys. And then RJ, congratulations, your target was just reached. Termination, everything rolls, no divergence, small triggers down with momentum, stabs back to the mid band. This is what we call a momentum style trade. Momentum in, loss of momentum out, right? I think John Novak even put in there, right? Won't do it if there's divergence on the low. You quit before the fib. Nice trade, RJ. Take a picture of it. Annotate the charts with what you see. Start working on that muscle memory. And now what do we see? We see an area of support. None of our trigger lines have broken through just yet. There's divergence on the low on the 5-1, so we're in a holding pattern once again. Large triggers are well above. There's your entry, great profit targets. Now, RJ, you've reached your termination condition, right? So are you going to sell directly into support that's just held? There's a 4-letter word associated with that. Hope. This is an area with no indication that it's going to break just yet. Large triggers are all the way up here. It might work for you, but what you're doing is you're taking a trade into an area that may reverse the market, and you're starting to build bad habits. And the market's probably going to give you this one, hoping that you break those habits, that you keep those bad habits going. And that's true. We don't tell you what you should or shouldn't do. And it's just a matter of, all I'm talking about is whether or not you have the advantage of a clear path. There's an awful lot of people that take trades so far outside of that conservative path because of their chart reading. Remember, it's not my job to tell you how to trade. It's my job to understand your rules and then help you stay accountable, help you stay focused on them. And then we give you the feedback based on the best way to read our software, best way to read the indicators, being able to identify those areas where the market is likely to stop. And you'll notice and there's John on the disclaimer. It all goes back to that basic form of chart reading, understanding where the market is likely to go, right? If you got in on this long trade with all that momentum, you could identify long ahead of time where the market was likely to go. When it reaches that to-go point and none of the trigger lines break through, you've identified where the market is likely to stop. With no divergence and everything rolling, RJ, you did an amazing job identifying where the market was likely to continue. And then once again, the same way you used Fibonacci above you, you could use Fibonacci below you to identify where that market is likely to go, create those profit targets. And that's all it is. It's just chart reading. And then what you find is the more charts you read, the more you begin to recognize these advantages. Odds favorable momentum, no termination conditions, area, window of opportunity, initial 12 to 14 tick stop keeps you safe. And now that market begins to work its way down. We can identify where the market is likely to go. We can identify where the market was likely to continue. And then if we reach that 1-to-1 and none of our trigger lines go through, then we can identify where the market is likely to stop. RJ, always on the 13-2. One of my favorite phrases is let the 13-2 lead the way. Let the 13-2 let you know that you have the momentum that you need. Excuse me. Let the 13-2 identify where the market is likely to stop. And then on your 5-1, we can use, and do you see those three divergences in the same location, RJ? Letting us know that it's likely to push down. We hadn't seen that change on the 13-2 yet, but we can identify it on the 5-1. And then once again, as we get to that area of support, we're starting to see those losses of momentum right at the key area. Divergence means that we're losing momentum. So on this little push back up, when this divergence prints, this cyan line prints, it just means that the momentum didn't follow. So the same thing is true here. As the market pushes right down, right to this key Fibonacci area, we can identify with this negative number, with this divergence low, that the momentum didn't really follow. And now we've seen it a second time where that momentum hasn't followed, right as we come into that key area that corresponds beautifully with a termination condition on the 13-2. Does that make sense? Justin, is everything coming good on the YouTube? Dab chain. Everything is good through no term. Market comes in, stop keeping you safe. Why the WTF? Well, looks to me like you did it perfect. You held strong. Everything said the market was likely to go down, right? You were able to pick your targets. Nice job, Dab Chain. This is why we study every day, building that trust. And I love that you went from what, the funky town to profits reached. Nice job. And then RJ, John gave you the picture for how we used to calculate divergence, but he's written it into the software. So it becomes very easy to recognize these losses of momentum. And dab chain, your entries, dude, your entries have gone full rock star. Nice job. Now we're into that one-to-one, right? We hit our target area. Anything can happen triggers. There's our second divergence with the small hugging in. Our areas are beyond the trigger lines. A little bit of chart reading. You guys remember the gap theory? Fibonacci is reached. Guys, this was an awesome profit target, wasn't it? And then those large triggers remained more than a full bar away. Do you see how price pulled all the way back? There it is again. I know we took a picture earlier of it as well. This is the pattern that helps you identify that this is not your best opportunity. Does that make sense? Gary, is it tradable? If you're willing to fight triggers. RJ, let me give you the picture. I think it's pretty cool because it stays. Yeah, maybe eventually, Gary, there are people that have developed a plan around it. RJ, I love this one because I think we all understand the idea of a slingshot, right? It's a matter of formulating a plan. It's a matter of formulating the rules for it. And that's what John's saying. When you begin to recognize this pattern happen over and over, and it's coming from that key Fibonacci area, start taking pictures. What happened on an 8-range chart? What happened on your 5-1 chart? Is there a condition that gives me an advantage that wins more than it loses on that pullback to the large triggers? Paul, I think I do. Honestly, I'd have to open it and take a look. Found that great target. Remember we talked about this. Price reaches the one-to-ones. Anything can happen triggers. None of your trigger lines break through. 2 divergences, slow down, and sure enough, the market's pushed up, guys. Everything is about patterns. You don't have them or the dots and arrows on the 8 range. Did I miss an RJ question? Is there a video notes to go with gap theory? No. But you can start taking an awful lot of pictures, recognizing that pattern. And this is one of those ones where, guys, you can become very familiar with a pattern by blowing up your 13.2. Mid-band is reached. Large triggers don't follow. The market continues down. Resistance is reached. Large triggers don't follow. Market continues down. And you can go through how many times do you see this phenomenon? Mid-band is reached. Large triggers don't follow. Once again, it continues directly to the key area. So RJ and anyone else that wants to build a little bit of comfort with the gap theory, just scroll back. Price comes off of support, exceeds the mid-band. Everything accelerates, but the large triggers don't follow. Blow that up huge. Grab your software and just annotate. Price snaps back to large triggers. What I've found is that 90% of what I want to learn, whoops, my screencast isn't working. Logged me out for some reason. %90 of the answers I want, I can scroll back on a 13.2 and find. So take a little time, do that study. It's going to pay huge dividends for you. Gary, termination condition, full reversal, odds favorable momentum. Gary, the one thing here is we're not a full bar away. And this is great for the lesson that we just talked about. I can identify my large triggers being a full bar away with this reversal bar marker right here. This is the point where this bar becomes a reversal bar. So if I draw an arrow all the way down to that reversal bar marker, you can see that my large triggers are above it. It doesn't change the fact that there's two areas of resistance with absolutely no trigger lines through it, but because we're on the other side of the reversal bar marker, the gap theory isn't the one that's really stopping us looking from longs. It's that termination condition right above us. Good morning, Claire. Let's see. How did I know this was going to be the trade that you showed me? Great top, full bar. When the small triggers post through, you take your first shot, let it come down as it pulls back with no divergence. You take your second shot, looks like it missed your target, so you get out with the reversal bar. Great trading. Way to take advantage. You notice that the first trade comes when the small triggers work their way down, when the second lower divergence from inside happens. Great job using the small chart to identify that change on the large chart. Great trading, Claire. Justin, termination conditions got you, right? Yep. One of the things that you recognize, we trade patterns that keep us safe. We recognize patterns. Here's that gap theory. Recognizing that it snaps all the way to Fibonacci and the large triggers don't follow keeps you out of this trade, right? You're like, hey, wait a minute. Price is likely to snap back. I'm not going to mess with that short trade. We'll let it work itself out, and you'll find that this happens a lot. So if you start paying attention, and Justin, you're recognizing patterns in yourself now. This is a couple, I think, today that you've gone into those termination conditions. Where you've done a great job recognizing the momentum, the direction, and that little patience, letting these areas break, is probably going to prove beneficial for you. That was my Achilles heel as well. And you know what helped me fix it was this spreadsheet. When I started taking every trade that I did and annotating it. So Justin, if you take this picture and rather than only focusing on, well, it lost, take the time to type out. Trade it into term, rule 2 not met, no trade. And you start taking this one each and every time that termination condition eats your lunch. What happens is you begin to believe it. And you can take that same picture, upload it to screencast. I thought I already signed in. You can take that same picture and you can come through and you can go to your favorite looks and you can call it termination condition, put it in your spreadsheet, take a look at it. And then you're good there. And then Paul, absolutely, there was a momentum trade right here where you still had that clear path. Claire showed us a great version of it somewhere in here where you have that great termination condition. But the key and the difference is that there's an absolutely clear path compared to that target being reached. And guys, I think this is a great lesson for everybody, isn't it? Getting the opportunity to recognize these patterns in yourself. Termination conditions hold again, don't they? Price reaches resistance, absolutely none of the trigger lines break through. No reason at all to look for a long trade from this mid-band. No reason to look for a momentum trade here. Let areas clear. Yeah, Claire's got all the patience of Job. Dab chain with all these lines in the way, maybe best to move to a different set for a while. Yeah, or go grab some lunch, make a sandwich, read a book, play a game, surf the internet. But I think that that's such a great statement. I can't do anything here. The longer you stare at it, the more you're likely to make something up. So guys, what do we have? Pivot stop out, smalls above the large, large above the one-to-ones. Some of you right now are saying, but Mark, there's an area of resistance inside of favorable large triggers. It doesn't matter if rule number 2 isn't met, if rule number 1 isn't met. RJ, so when the large triggers do not follow when termination condition is reached, price will bounce. Otherwise, if large triggers following, then price will break through the termination condition. Let's go through the recipe once again, and we'll use this picture right here for it. Because this gives us a couple examples. So it's a two-part process. Whoops, that's not an arrow. And we're going to go ahead and annotate this and give it to the class. Let me drop my font down just a little bit so it fits. Price reaches support, no triggers through. This is textbook termination condition. All right. So there's that first one. You comfortable with that one, RJ? And then once again, watch this. Go in the other direction. Price pulls back to resistance. No triggers are through. This is a termination condition. RJ, when the small and the large break through, notice how support begins to act as resistance. This is what it looks like when an area breaks, and this is what it looks like when an area holds. And we've got the same thing up here. We'll use that stamp a little bit. No long trades, no long trades, no short trades, no long trades because we've reached resistance. So all of these are areas where the market is likely to stop, and what we're looking for is the advantage. And there was a short trade to be had right here. I want to say Dab Chain caught that one, did great with it. There was probably a short trade right before this happened, but here the market's just working itself out and we're waiting for that advantage. So if you always go through that two-step process, price reaches an area. If none of the trigger lines go through, we're not going to trade into that area. Here we have one happening right at a pivot stop out. And you don't have odds favorable momentum as well, right? So I have a termination condition in the form of 1-to-1s. I also have a termination condition in the form of a pivot stop out. And guys, there it goes. Right up past that area of resistance inside of favorable large triggers. Taking the time to let rules 1 and 2 be met, then you don't focus on that small chart. Did you also notice that your large triggers are above the synthetic triggers? They're on the wrong side for the trade. One more little thing to keep you on the right side of stuff. Does that help a little bit, RJ? And this goes back to John's Elon Musk trade. If you had a job that paid $1 million a year and all you had to do was click a mouse about every 3 hours, could you have the patience to do that? Still a little wobbly? That's all right. So let's go back to the user guide once again and go to termination conditions. And let me give you the link to this video. So RJ, here's your homework for tonight. This video is going to talk about the trigger line location to the areas and help you identify and understand termination conditions just a little more clearly. And then if you have a question about them, bring them to class tomorrow. Ron, you're already on your way to sitting for 2 hours and then clicking, aren't you? You don't need Elon. You've already found that patience piece. The white lines on the 5-1, Justin, these are my reversal bar markers on the 13-2. So see where my reversal bar marker is at 40.34? I just have them on here. This is a little something that you can use when you're looking for that momentum trade, that one that Claire caught beautifully. One of the things that has to happen is you need a full reversal bar on your larger chart. This just helps you identify where it's going to come from. Patience and lazy are not the same thing. I'm great at being lazy. I struggle to be patient some days. Smalls are above inside of those large triggers. I don't really have the advantage of momentum yet. All of my triggers are beginning to roll and agree, have a termination, a lower divergence. The market is certainly leaning to the downside, but if you're a high probability trend trader, you just don't have the advantages that you need yet. Termination conditions still holding in that holding pattern, just waiting. You want to be lazy right now? Guys, great class today. The questions are amazing. Justin, you always want to get in early. I think that initially we want to get in early. And Justin, it's actually, I want you to celebrate the fact that you are wanting to get in early, because what it means is you're reading your indicators. It means that you're beginning to recognize change before it's actually happening. You're beginning to recognize when the probabilities are kind of going your way. And then you learn to, Justin, kind of hold that a little bit. Hold off. And let me see if John's pictures, let me find that picture. I've got so many pictures. Oh, I've got so many pictures. John posted a picture of the continuation, letting those triggers. So for example, letting everything line up, right? Letting every trade line up, letting every trigger line line up. And if it's going to be a bottom, for example, if this is really going to be long trades, aren't these trigger lines going to roll? They have to. Aren't the small going to stay above? Aren't we going to see that change coming through? We did on the S&P. When everything's set up, eventually Everything's set down. So rather than having to be first, Justin, you develop this little patience piece. And it's a celebration. It means that you're reading your indicators. It means that you're understanding potentials to turn. It means that you're understanding areas likely to stop the market, likely to reverse the market. And now you just slow down and take a lot of pictures of when they work effortlessly. And that's exactly what having every trigger line in the same direction does for you. RJ, following the rules gets rid of that pain in the ass, choppy market. It sure does. Absolutely, Justin. Can't we identify when the market's fighting, when it's going choppy? What do you guys think? By using Fibonacci and a couple simple rules, price pushes down, that resistance doesn't relinquish, does it? That's a termination condition. Another termination condition. Another termination condition. When you see this happening, you know you don't have rules met, so you can say to yourself, that's that window I want to see the market break out of with odds favorable momentum before I look for my next trade. Because right now, I'm trading in a box. Drag racing in a shoebox, guys. And you're not going to find trend trades where there's not a trend, but Fibonacci and trigger line location is going to help you identify when that trend is shut down a little bit. Does that make sense? Dab chain, the music selection helps a lot. Boxed up Insane Clown Posse and got the Bee Gees keeping you alive. I like it. I think John listens to reggae. But it works though. Get that little mellow going. I definitely couldn't trade listening to Rancid or something like that. I'd get a little excited. And Gary, only taking 7 trades is definitely making progress on patience. Go back and retrade the day. Make sure that those 7 were the right 7. Make sure that you were doing it. There's a little patience, right? 2 5-tick trades, 100% winners, 1 long, 1 short, 3 lot times 10 accounts, 3 grand. Done for the day. Ben, that's not so bad. Absolutely, Ron. You could supersize today if you wanted to, Ben. Maybe even get like a milkshake or something for dessert. And look at that. They finally made it to that key area. So what's 3K if you do that every day? It's a $15,000 weight. Guys, that's a $60,000 month. I don't know about you. I could do all right on 60 grand a month. I'd probably be pretty comfortable. And that's just a 10 lot, isn't it? What happens when that exactly same conservative month is executed on a 100 lot? It starts getting a little astronomical, doesn't it? It almost doesn't even feel realistic. But guys, here's the reality. The idea is to focus on the process. The idea is to focus on the rules. The idea is to focus on taking the advantages, being smart with your money, having money management, letting your account build itself. If you focus on the process, the results will come. It's no different than swinging a golf club, which I'm going to be doing in a little bit. Pretty excited about that. If you focus on the process, the results will come. If you have a tiny little $40 a day micro goal every day and you're consistent, you make $1,600 that month on an $800 account. Do it for 3 months. Prove that you can follow the rules. Prove that you can embrace the process. After 3 months, that $800 is turned into $5,600. And then go to 1 lot on the S&P, guys. $5,600 account. That same $40 yields 8 grand. Do it for 2 months. Prove that you can embrace the process, that you can be consistent, that you can follow rules. Bump it to a 2 lot. That same $1,600 on a micro is $16,000 on a 2 lot, 24 on a 3 lot, 32 on a 4 lot, 48,000 on a 6 lot, and it continues to escalate. And the only thing that changes is the amount of contracts. Not that great trade. You don't have to add trades. You don't have to become aggressive. You don't have to change your whole money management strategy. All you're doing is looking for $40 a day and let the contracts change that number. Does that make sense? This has been your screensaver for years. This is a great one. How many months is that? 1, 2, 3, 4, 5, 6, 7, 8, 15 months, a little over a year and a quarter with consistency. The key is finding the consistency. The key is doing the study, recognizing the trades that make you comfortable, that give you the highest chance of success, understanding when you have odds favorable momentum, and even more so when you don't have odds favorable momentum. Understanding when you have a clear path, but even more, understanding when you don't have a clear path. Dab chain, if they're using the same license key, you can't run both at the same time. But for example, I've got my NinjaTrader license on 7. I've got my Apex license on 8. If I wanted to, I could run both at the same time. That's it. Patience and not greedy. I think not greedy is one of the biggest ones. And guys, that was one of my downfalls initially, is I would try to make losers back, if that makes sense, rather than accepting that losers are a part of being a day trader. Not winning every trade is a reality of life. And the second you try to make up for a great trade that didn't work, then you start changing things on the fly. You abandon the plan. And that's when you may be up 3 or 4 points, and normally that you would have exited, taken profits, moved on, you hold on and hope. And for you guys that have issues with NT8, NinjaTrader 7 is in fact the exact same thing. John gave you the link. Ron, I think it would be considered revenge trading. I think it's more fear trading. For me, I guess it doesn't really matter. Revenge trading is trying this short when it says that it shouldn't go short, and then trying it again up here, and then trying it again up here, and then trying it again up here, all the while just getting rid of the fact that you're trading into a termination condition, that you don't have a clear path. Trying the short here when it doesn't go, trying it again here, getting stopped out again, because we're so egotistical. We believe that if we do something, it has to be right. But if we take a deep breath and analyze whether or not our rules were met, suddenly you're like, oh, okay, it's just not my trade. It's not my rules. So it's probably both revenge trading, but that's my definition of revenge trading. Taking the short trade a third time, long after. Push all the buttons and get it out of your system. Yeah, without a doubt. Taking the trade that looked good the first time but stopped looking good over and over. That's that revenge. And guys, the market's kind of working its way in a little funnel here. Pivot stop out, at support, full reversal. Now we're starting to see if 80.49 breaks, we'll look for odds favorable momentum to the upside. If 80.49 holds, we'll see what breaks down. But RJ, do you see it again? Support to resistance, support to resistance, support to resistance. Sometimes the market's going to make you sit on your hands, but isn't it great? I don't take a loser into resistance, and I don't take her into support. I don't take one into resistance. I don't take one into support, and I don't take one into resistance. Sometimes the path isn't all the great trades you take, it's the poor trades that you avoid because they don't give you those advantages. Guys, this has been a great class today. A lot of chart reading, a lot of great questions, a lot of interactions. Before I go today, let me just ask, I know that I've got about 60 of you in here. If you're brand new on demo, if you're learning the software, if you're getting acclimated, this is the Nexgen Education Room, and this is what we do 5 days a week. I think we take 2 weeks off at Christmas. Other than that, we're here for you guys. We're here to give you feedback on your charts. We're here to talk about the rules. We're talking about your execution of the rules. If you write a trading plan that you'd like a second set of eyes on, I'm always willing to do that. You can email me. John Novak always makes himself available as well. Committing to the process. Oh, the day after the Super Bowl is a room holiday. Committing to the process, doing the study, practicing the trades, running through all that, guys, that's on you. We've given you the highest powered elliptical you could ever get in shape on, but it's up to you to spin those wheels to get going. Commit to the software, commit to the process, commit to the room, and let's get you guys where you want to be, because 2023 is already shaping up to be a fantastic year, and we're not even a month into it. Let's get everybody on board, move in the right direction, and then let's go buy an island somewhere and drink pina coladas. It'll be fun. And guys, on that little inspirational tirade, we're going to call it a day. Your crude oil chart is trading directly into a termination condition that has the potential to reverse the market. If then, your S&P has kind of stalled out, and we don't have odds favorable momentum. I don't have rules for a high probability trend trade met on any chart just yet. So I'm going to sit on my hands, go build a sandwich, maybe hug my wife, and I'll the next gen. I like that. You got to say it Isla because it sounds better. It sounds exotic. Guys, enjoy your day. Get some market replay done tonight. Take some pictures of it. Bring them to class. Watch those videos. RJ, watch the video on trigger line location. Watch videos on entries. Look at the pictures on entries. Take pictures of those pictures. Present them in class if you have questions, and then you'll be good. Asked a guy down here why he was working at a gas station. He said, I don't need to get rich. I just want to get by till the fish start biting. I like it. Good stuff. Guys, I'm going to call it a day. Thank you for being here. I enjoyed the class. I hope you did too. I hope you learned something. I'm always open to feedback. I'm always open to questions, suggestions, whatever you need. Send them to me. But guys, this is just the beginning. If you're on demo, it gets better and better every day. I'll talk to you guys tomorrow morning. Take care, everybody.